Hello everyone, welcome back to Road to Ownership. We are here today to broaden our understanding in the realm of real estate. Our focus: how much home can you really afford? This is a crucial financial guide for first-time home buyers. Before we delve in, do take a moment to subscribe to this channel. Your support means the world to us. In this video, we're going to tackle the all-important question of home affordability. It's easy to fall in love with a house, but it's crucial to know whether it's a financial match. Understanding your financial capacity before making such a significant investment is paramount to avoid future financial stress. We'll discuss how to determine your budget, shop within your means, and make smart decisions that lead to successful home ownership. So, stick around to understand some key concepts and figures that will help you make an informed decision. Here's to embarking on your journey to home ownership with confidence and clarity. So, what does home affordability mean? It's more than just your home's price tag. Home affordability is a concept that goes beyond the simple sticker price of a property. It's about understanding whether you can comfortably afford the home you have your eye on, taking into account your income, debts, credit score, and the size of your down payment. Let's break down these factors. First up, income. This is your total earnings before taxes, including salary, bonuses, and any other sources of income you might have. It's important to have a steady income that can consistently cover not only your mortgage payments, but also other housing expenses, such as utilities, insurance, and maintenance. Next, we have debt. This is the total amount you owe to lenders, including student loans, car loans, and credit card balances. High levels of debt can impact your ability to secure a mortgage or may result in higher interest rates. Your credit score is another crucial factor. This 3-digit number reflects your creditworthiness or how likely you are to repay borrowed money. A higher credit score can open the door to better mortgage rates and more favorable terms. Lastly, the down payment. This is the upfront amount you pay towards the purchase of your home. The larger the down payment, the smaller your monthly mortgage payments. Now, how much should you ideally be spending on housing? Well, most financial advisors suggest that you should spend no more than 28% of your gross monthly income on housing expenses. This is known as the front-end ratio. It's a useful benchmark, but remember, it's not a one-size-fits-all rule. Your comfort level with your housing costs might be different. In summary, home affordability isn't just about how much a house costs. It's about whether you can comfortably handle the mortgage payments and other associated expenses, given your income, debts, credit score, and down payment. Understanding these factors and how they affect your home buying capacity is the first step towards making a wise financial decision. Now that you understand what determines home affordability, it's time to crunch some numbers. So, how do you calculate a budget for your home? It's a step-by-step process that's simpler than you might think. Let's walk through it together. First, consider your income. This isn't just your salary, but all sources of regular income. Maybe you have a side gig, or perhaps you're receiving regular payments from an investment. Factor all of these into the equation. Next, we need to think about your existing debts. These might include student loans, credit card debt, car loans, or any other recurring financial commitments. Deduct these from your income to get a clearer picture of what's left for your home budget. Now, let's consider your future expenses. You need to think about how much you'll need for utilities, maintenance, home insurance, and property taxes. These aren't one-time costs, but rather ongoing expenses you'll need to cover as a homeowner. Once you've factored in these elements, you'll have a rough estimate of your home budget. But remember, this isn't just about numbers, it's also about your lifestyle. Consider what you might have to give up to afford a more expensive house. Are you okay with eating out less or perhaps vacationing a bit less frequently? If not, you might want to consider a more modest home. And don't forget about emergencies. Life is unpredictable, and it's always smart to have a safety net. Aim to set aside a portion of your income for emergencies. This isn't directly related to your home budget, but it's an important part of your overall financial health. Finally, consider getting pre-approved for a mortgage. This will give you a more precise idea of how much a lender is willing to loan you. It'll also show sellers that you're a serious buyer, which could give you an edge in a competitive market. Remember, this budget is a guideline, not a rule. It's essential to consider your personal financial situation and comfort level. With a budget in mind, you're ready to start shopping for a home. Now is the perfect time to put on your detective hat and start the hunt. Remember, the internet is a treasure trove of information. Use it to your advantage. Websites and apps can help you find homes within your price range in your desired location. But don't just stop there. Take a step further and check out the neighborhood, schools, and accessibility to amenities. As you shop, remember that the purchase price is just the beginning. Home ownership comes with a long list of ongoing costs. Property taxes, insurance, and maintenance expenses are just a few to consider. For instance, an older home might have a lower purchase price, but could require costly repairs down the line. On the other hand, a new home might be more expensive upfront, but could save you from unexpected repair costs. Also, don't forget to factor in potential changes in your life. Maybe you're planning to start a family or you're nearing retirement. It's important to consider how these changes will impact your budget. Above all, be patient. Shopping for a home is not a race. It's a journey. If a home feels out of reach, don't be disheartened. There are always more options out there. Make sure to stick to your budget. It might be tempting to go over, but remember, you want to enjoy your new home without worrying about financial stress. So that's a quick guide on how to figure out how much home you can really afford. Remember, understanding your financial situation is the first step to making an informed decision. We've covered the basics of home affordability, determining your budget, and shopping within your means. Knowledge is power, and with this information, you're now better equipped to navigate the real estate landscape. One last thing. If there is a topic you would like us to cover, please add it in the comments section. Also take a moment to share and like this video. Thank you.